I'm Steve, and if you're new to Forex trading, you've definitely seen this before. A currency pair followed by this long, kind of intimidating string of numbers. It can feel like you're staring at a math problem you weren't ready for. But don't worry, by the end of this quick explainer, you're going to know exactly what it all means.
So you see this number, 1.1728, sitting right next to UR/USD. What does that actually represent? What is this price trying to tell you? Well, let's break it down.
First things first, forget about it being a math problem. It's not. That number is just a price tag. And the best way to understand that price tag is to picture every currency pair as a constant, powerful tug of war.
That's right. In Forex, you are always pitting one country's economic strength directly against another's. It's this ongoing competition, right? And the price you see on the screen, well, that's just a live score.
So when you look at a pair like Euro-USD, what you're really watching is a direct contest between the economy of the Eurozone and the economy of the United States. And today, I'm going to show you exactly how to read that scoreboard. So let's get into the mechanics of it. Reading the price quote is everything. And luckily for us, there's one simple golden rule that applies to every single currency pair you will ever see.
And here it is. The first currency listed, what we call the base, is always equal to 1. Just 1. No exceptions. This little fact is the foundation for understanding everything else. So we call that first currency the base currency. The easiest way to think about it is it's the single item you're looking to buy, like one gold coin you're holding in your hand. In the Euro/USD pair, the euro is your 1 unit.
Now, the second currency is what we call the quote currency, and this is where our price tag analogy really makes sense. The quote currency is simply the price in that currency for your one single coin. It's that simple.
Okay, so let's put it all together. If the price for Euro-USD is 1.1728, it just means that for every 1 euro, our base currency, it costs $1.1728, our quote currency. You're paying just over $1.17 for one single euro. See? Not so scary.
All right, so you can read the scoreboard. That's a huge step. But how do you actually place a bet in this tug-of-war? How do traders actually make money from all these price movements?
It all comes down to this one question. You look at the two economies in the pair, and you just decide which one you believe has the upper hand. Your answer to that question determines your next move.
And the decision is pretty straightforward. If you believe the Eurozone economy is gaining strength, you buy the EUR-USD pair, betting that this price is going to go up. But if you think the US economy has the momentum, you sell the pair, betting that the price will fall.
Now, this is a key point for beginners, so listen up. When the price of a pair goes down, it doesn't mean something bad is happening in the market. It just means the second currency in the pair, the quote currency, is getting stronger. It's winning the tug of war.
Look, there are thousands of currency pairs out there, but as a beginner, you really don't want to get lost in all that noise. To start, you need to stick with the major players. My advice? Focus exclusively on what we call the majors. These are basically any currency pairs that include the US dollar, and there's a very good reason for this, and it all has to do with sheer size and power. And why is that? It's because the dollar is the king of the mountain. It's the world's main reserve currency, which means it's involved in over 80% of all Forex trades. That immense volume gives you a stability and a liquidity you just won't find anywhere else. These major pairs, like the cable for the British pound or the loonie for the Canadian dollar, have the most trading volume. And what that means for you is there's a smaller difference between the buying and the selling price. We call that a tighter spread, which basically means it costs you less to make a trade. So, as we wrap this up, please, don't get lost overthinking all the decimals. Just burn this one idea into your memory. In any currency pair, the first name is the 1, and the second name is the price. You master that, and you are well on your way. This is Steve. Keep your eye on that tug of war, understand who has the momentum, and I will see you at the open.